Hello guys, you're welcome to Forex CMC Trading. On today's episode, I'll be teaching you the concept of basic and advanced market structure. Now I want to pay attention because the things I'll be sharing with you in these videos are this video are things that are very premium in context. So that simply means you will not see content like this in the mainstream media. These are some of the secret that makes your pro trader, especially traders that trade smart money concept, right? So having said this, and I want to also say that a thorough understanding of market structure can increase the odds in your favor. It can help you to filter the noise in the market and make you to maximize moves. There are times in the market where you just stay out when you understand advanced market structure. There are things in the market you just stay out because you know that those things are simply noise, and your ability to filter noise is makes you a profitable trader. That is why sometimes trading every day is not ideal, right? So having said this, if you don't subscribe to this channel, kindly subscribe because I bring you premium content every time. So having said this, let's go. What is market structure, right? And before I go to this definition, I want to tell you that irrespective of your strategy you trade, you need that strategy must incorporate advanced market structure. Otherwise, that strategy may fail more than it gives you profit. Right? So market structure is the building block of the financial market. That means that either is crypto you are trading, either you are trading forex, that is currency pairs, or you are trading futures, or you are trading synthetic indices. Whatever market you are trading, the building block of that market from a technical analyst perspective is market structure, right? So, and we have three types of market structure. We have the bullish market structure, okay, then we'll have the bearish market structure, market, we call it bearish or downtrend, okay, bearish market or downtrend. Then we'll have the consolidation market, the consolidation market. Let me just quickly put that up in writing. So that you call it a consolidating or sideways market. From the name, you already know what it is, but I will take my time to explain each and every one of them. And the bullish market structure, market is like from the word uptrend. Market is creating series of highs and lows, right? From your basic market structure, you were taught that this is a low and this is a higher low. Just a way of recap, this is a higher low, sorry, this is a higher high, sorry, this is a higher high, this is a higher high. So, and this is another higher high, right? So this is bullish market. In the same way with bearish market, we have something like this. This is from a basic market structure perspective, right? So we'll see how the advanced market sees the market, the advanced market perspective of market structure. When I mean advanced, I'm talking about how the smart money views the market. So that is very important, especially those that are, if you're a smart money trader, you should pay attention very well. So this is a low, a high, and this will call this a lower high because it's lower than this. Sorry, a lower low. Sorry, a lower low. Let me just quickly effect that. Lower low, and this becomes a lower high, another lower low, then a lower high, just like that. lower low. So this is from the from the basic market structure perspective, right? And in bullish market, just to throw in more light, buyers are always encouraged while sellers are discouraged. Like if you see this now, you agree with that sellers push this market here, and when someone sold here, stop loss should be around this place. Now someone bought here, stop loss should be below. Someone sold like that, stop loss should be above. Bought, stop loss below, so on and so forth. Now you see that people that sold here, as at when price was here, they must have been taken out, right? The same way when price was here, people that sold here must have been taken out. So in this market, buyers are encouraged. When you say market like this, from the basic market structure perspective, right, you must be looking for buys, more buys than sells. Not that if you sell you will not make profit, but you will tend to make more profit when you are in line with the structure of the market. Same with bearish. Then consolidation, it doesn't really have a particular direction, right? In consolidation, what is really happening is liquidity, creating liquidity. Market create liquidity. Sometimes it will move up and take this liquidity here, and sometimes price will move down, take this liquidity here. This is sideways market, and sometimes it will come back again. Many persons have been caught in this kind of market. It's a very funny kind of market. It can mess up with your emotions. At a time you be in profit, another time you're in a loss. At a time you're being in profit, another time you're in a loss. So this is what happens. The price come like this, just funny market, and to come back again, and price will just be doing his own thing. This is consolidation market, right? So having said this, now let's go to the advanced market structure perspective. Advanced market structure now, how does the smart money view this market? How do they view this market? Now let's go. Okay, so advanced market structure takes into consideration the concept of liquidity sweep and inducement. In my two previous videos, I dealt extensively on liquidity and inducement. So if you've not watched those videos, kindly go to my playlist. You see smart money concept. The two videos are there. So having said this, now let's see how the smart money views the market. Now let's say we'll have a bullish market like this. I'll use a chart to show this example so that we see it in the chart, because in real life, when you go to the chart, the market does not move like this. Sometimes it does, but rarely does it move like this, right? You see market sometimes move like this. You think, okay, you enter your buy here, you see market does something like this and buy. Okay, then you see, okay, now say, okay, I'm cool. You see price coming down like this. Now say, wow, okay, this is happening, and you place your buy here. Find out at the end of the day, price will do this and buy, right? So this is how the smart money views the market. So that means that at this level, there was, liquidity was swept here, right? And there was an inducement here. People bought here. So that inducement was taken. That inducement could happen when it's retracing, or it could even happen when this price is an impulsive move. What do I mean? We can have something like this. Let's say price, sorry, I'm coming. Let me capture this very well. So let's say we can have a market structure like this. Let's say market was selling, and break of structure from our basic market structure notion, right? And you see something like this, does something like this. Now why market is moving to do this, it could create its own liquidity, right? It could create something like this. The market start moving like this, then finally a break of structure happens. Now this is liquidity swept, this low swept liquidity, and there's a break of structure. Now this is inducement. So when these two happens, liquidity sweep, right, inducement, then this low becomes a valid low, and this high becomes a valid high. So when price start retracing, we will be confidently waiting for price to sweep this liquidity here. Then we use anything here, maybe other block or something, and we see price move higher. Same thing for sales, right? Now, having said this, let's look at the chart quickly. Let's see this from the chart. Now, these are some of my analysis I did. I took some of these trades, and I took this trade here, and I took this trade here. So now let's see something real quick. Let's see something real quick. Now let's start from here. Let's start from here. We see market moving like this, downtrend. Now see this high created. What is this? We agree that there is liquidity here, right? The liquidity was swept. So this makes this liquidity was swept here. Condition number one. Then the condition number two, it created an inducement leg here. You see that now when this happened, we'll make this becomes a valid high and a valid low, valid high and a valid low, right? So we can mark this to be a valid high, right, and this to be a valid low. Now what are we expecting? Now we know this price already downtrend because you see the movement that price is making now, and this is an inducement, so we don't expect this high to be taken out. So what do we expect? We expect price to come here and sell, and that was what price did, right? But when we came here, something very interesting happened. Something very interesting happened here. So let me just put that in perspective. Something very interesting happened, and let's see that. Now this becomes also another valid high because it swept liquidity here, right? And broke structure, and there is inducement leg here. There is inducement leg here. How do I know that this is inducement? Because at this point people sold, and we know that the trend is bearish, so people sold here. People sold here, we know, right? So something very interesting happened here. This becomes a valid high. This becomes a valid high, and this becomes a valid low. Why are they valid? Because let me show you why they are valid. Come down, a valid low. Now why are they valid? Because here swept this liquidity. So okay, this swept liquidity here, this swept this liquidity, and there is an inducement leg here. There's an inducement leg here. So that simply means that here is supposed to be a valid high. Here is supposed to be a valid high, of which price violated. So price violating this, what does that tell you? That I'm no more interested in the sales, because if price is truly going to sell, it shouldn't violate this. So this becomes our break of structure. Let's see. Okay, so something interesting happened here. So this becomes our break of structure, or I mean change of character. Why? Because this becomes our change of character. I like using candle body close because the body tells the story and the wicks are simply noise, right? So this becomes our change of character. So what am I expecting? I was expecting, like we see here, price came back to this other block, and price bought aggressively. There is something that will make this low. Why did I choose this low? It's very simple. It's not because it's the lowest low there. It's because one, this low satisfies our advanced market condition, right? And what are the two advanced market conditions? That this low swept liquidity. Look at the liquidity is swept here. It swept this liquidity, right? And there is an inducement here. there's an inducement here which price took, right? So this makes our this low valid. So if this is going to buy, it simply means that this low should not be violated, and we see obviously that this low wasn't violated, and price, you see that the low was not violated, and price, bought aggressively. Now this last thing I want to show you here is what happened here. Something also very interesting happened here. I caught this trade, and I caught this, I caught this, I caught this. Now, something very interesting happened here. I already marked it out, and some of you already know what I want to say. Now, this is liquidity sweep, condition number one, and this is an inducement. So this makes this high valid. So you see, price came to that high. Let me remove this. Price came to this high. Price came to this high and sold. And we see another thing here, another interesting thing here. This high becomes a valid high and a valid low, right? So that simply means that we expect price to come up. There's an inducement here. You see two conditions: liquidity sweep, inducement. Liquidity sweep, inducement. So price came up and sold from there, right? This one also liquidity sweep. Then this is an inducement leg here. Price took the sellers here because people sold here, right? Took those sellers, and this becomes our another valid high, right? This becomes a valid high. You see how price was just doing his own thing. Price was just doing his own thing and doing his own thing like that, like that, like that, like that. So, having said that, I hope you find this video helpful, and I know and trust that this video will make your journey to profitability a bit easier. Please, I will advise you to backtest this and do it again and again so that you master it, because repetition is the key to mastery. See you in my next video. Cheers and God bless you.